Hello everyone. This is the pre-market report video for today, 27th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, thanks for all the kind words yesterday in the comment section. Honestly, it's just mostly luck. And I'm really afraid now because quite often I do this experimental study. If you are wrong, nobody gives the importance and we can be invisible. And if you are correct, we can get more noticed and the pressure to be being further correct is very high. So, am I able to predict correct in future? Honestly, no and don't know. As I said, it's either lucky or coincidence. However, I'm happy to share whatever I'm finding. But please be aware, it's just a view based on numbers what I see. There are numbers and stories which I don't see and don't know. Most of the time that will drive the market. So please don't make investment based on this. One more thing, I don't have any Telegram or WhatsApp group. I try to delete and raised complaints regarding those fake accounts, but they keep on creating new one. So please be aware of it. Anyway, now coming to the pre-market stuff. Regarding yesterday's price action, I don't need to say anything. Most of the viewers already know. Nifty not only had the breakout on 26,000 mark, but also it had a breakout from 26,200 mark. However, I like to highlight one thing about the price action. This is the yesterday's price action and the next one is 12th September Nifty expiry. If required, please pause and have a look. It's very similar price action. So literally looks like same FII entity is driving the market and that very big fish eating all the small fish. So that happened. What next? We know on Wednesday, FII in the index option segment, the net sold for 56,000 crore rupees. On the contrary to that, yesterday on Thursday, the net bought for 1,11,000 crore rupees. This is really a massive amount. And if we analyze the participant-wise open interest means, FII bought almost 3 times put options, then they sold call options. So if we do the standalone analysis, it appears bearish stance. But in the future index market, at present, FII got 80% long and only 20% short. In addition, if we do further analysis means, in Nifty future, they got the open interest worth of 29,500 crore rupees. 80% of 29,500 crore rupees is 23,600. So approximately now after expiry, FII is holding 23,600 crore rupees of Nifty future long. Hence, whatever they do maximum side in the option market is a hedge to the future market and also for the other option trading. I hope everyone able to follow me. Combining all, it looks like, according to me, FII haven't changed their stance and compared to yesterday, they are still expecting the market to increase. Please remember, I can be completely wrong. For the upcoming weekly expiry, they might do the primary trading either in Nifty or in Bank Nifty, which we can possibly try to predict after Monday and Tuesday price action and open interest data. But for now, as I said, their stance for this upcoming weekly expiry is positive. It can be Nifty or Bank Nifty and anything can happen today. I mean, when I did the research for Wednesday pre-market video, I was convinced myself that market will go up on Thursday. So only on Wednesday morning, I bought the call option. Similarly, when I'm doing the research for Thursday pre-market video, I was very much tempted to convince myself to take the bearish stance for Friday, which is today. But I told myself if market increased on Thursday means this is what most retail traders also will think that Friday market will drop. So I refrained myself from saying that in the last pre-market video. And more importantly, in a good way, I didn't sell any call options. Anyway, those were the things I want to convey about yesterday's Indian market. Now coming to US market, their second quarter GDP grown by 3%, which is in line with the expectation and almost double the time grown compared to Q1, which is the first positive. Then regarding the new durable goods order, month-over-month basis, analysts expected the contraction, whereas the data didn't expand, neither contracted. So that's the second positive. And in addition, in the 10th annual Treasury Conference, Fed chairman haven't said anything hawkish or anything that's relevant. Rather, he spoke just about the importance of the conference. So all these made all three US major index to close positive. Dow Jones up by 0.62%, S&P 500 increased 0.4%, whereas Nasdaq up by 0.5%. In case of VIX, it's roughly same around 15.4. In addition to that, yesterday Accenture released Q4 and full year earnings results. Both revenue and net profit beats the analyst estimation. In addition, Accenture announced the dividend and $4 billion worth of shares buyback, which all made the Accenture share price to increase above 5.5%. In line with the Accenture increase, both the Indian IT ADR stocks increased around 2%, whereas both the banks ADR closed flat to negative. So clearly, today we can expect the IT to trade positive, but for banks from the ADR perspective, no fresh movement. Regarding GIFT Nifty at 3 AM Indian Standard Time, it closed at 26,376. Since yesterday was monthly expiry day, at present there is a premium of 90 to 120 points. So it's kind of indicating flat to positive opening. Then regarding oil, in the last 3 years, Saudi Arabia has been working around its oil production volume to attain the target of $100 per barrel. But according to Financial Times, Saudi Arabia is going to dump its old idea, and from now onwards they are going to prioritize to gain its market share back, which in turn made the oil price to drop near 3%. At the time of this video, WTI crude trading around $67.5 per barrel and Brent crude closed around $71 per barrel. As a summary, US market was positive, global momentum improved, IT ADRs indicating the positive trade. However, GIFT Nifty indicating a flat to positive opening. Here, please note the negativity around HDFC Bank may be due to its 6,000 crore rupees worth of loan sell to other company. Moving on, as per stock open interest, Crompton, Cipla, Coforge, India Mart and City Union Bank got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Jindal Steel, Titan, HCL Tech, Infosys, M&M, Asian Paint and Ultra Cement got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, before our market opening, Japanese September month inflation data is scheduled to release, and during our market time between 12 to 2 p.m., France inflation, Germany's unemployment and Europe's wholesale inflation is due. Finally, in the night, US very important PCE inflation for August month are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened flat and remained positive for most part of the day, but in the last hour it increased significantly. Thus, it closed above 26,200 for the first time, with volatility hitting a 2-month low. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with above average volume and an expansion of Bollinger Band. So finally, Nifty has broken out of consolidation, indicating increasing bullish momentum. Additionally, Nifty sustained the higher high formation for the 7th consecutive session, while the momentum indicator RSI maintained a positive bias, but it's very close to the overbought level. Hence, the sentiment is expected to stay positive. A drop below 26,000 might disrupt the current bullish trend, but until then, Nifty likely to increase. In case of Bank Nifty, it opened 60 points gap down, however sustained above 54,000 mark and finally closed at above 54,300. Similar to Nifty, Bank Nifty also formed a bullish candlestick pattern on the daily chart with average volume and a higher high higher low formation. Hence, now it must hold above the 54,000 level to move towards the 54,750, then 55,000 zones, while on the downside support has shifted higher to 54,000, then 53,750 level. Regarding the monthly options data, the maximum call option open interest was at 27,500 strike, followed by 27,000 and 27,700, with maximum new call option rating at 27,500 strike and then 27,700 and 27,000. On the put side, the maximum open interest was at 25,000 strike, followed by 26,000 and 23,100, with maximum new put option rating at 25,000 strike and then 23,100 and 26,000. Thus, from options data, it's indicated that Nifty might face resistance at 27,000 with immediate support at around 26,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.